Every day, someone reaches out to me through my website or social media or just via email, and they ask me to compare a traditional long-term care insurance policy with a life insurance policy with a long-term care rider, which, to make it short, we'll just refer to those as hybrids. Now, here are some simple steps to help compare traditional long-term care insurance with a hybrid. Now, this is the most important thing to compare. Make sure the hybrid is guaranteed to remain in force for as long as you live. Why? Well, because traditional long-term care insurance is guaranteed to remain in force for as long as you live, as long as you pay the premium. A traditional long-term care insurance policy cannot be canceled, but there are some hybrids that can be canceled, even if you pay the premium every year. Now, the next step is to ignore the death benefit in the hybrid. Well, why? Because the death benefit might be wiped out. If you need 2 years of care, most, if not all, of the death benefit will be gone. Next, ignore the cash value in the hybrid. Why? Because if you cancel the policy for the cash value, well, you lose the long-term care benefits and you lose the death benefits. The next step is to make sure the hybrid and the traditional long-term care insurance policy you're comparing have similar monthly benefit amounts. The monthly benefit is how much the policy will pay for each month that you need care. So make sure that the hybrid and the traditional policy have a similar long-term care monthly benefit. Next, make sure that the hybrid and the traditional policy have a similar lifetime maximum. In other words, how much can the policy pay in long-term care benefits over your lifetime? Next, make sure the hybrid and the traditional policy have similar inflation protection. Lastly, calculate the difference between the hybrid premium and the traditional long-term care insurance premium.